Hi, Adrienne. Welcome. Thanks so much for joining me today.
Hi, Kelly. Thanks so much for having me.
Well, I've been talking for the last few minutes here, so I'm kind of going to just dive us and turn it straight over to you. You have amazingly broad experience with innovative fintech companies as an investor, a founder, a board member, advisor, regulator. You've really seen kind of all angles, which is so impressive. How did you originally find your way into fintech in the first place?
Yeah, well, I have a long history in financial services. I like to say it's the only thing I know anything about. So I've been in government, in the private sector, on political campaigns. I started my career in big law at Sullivan and Cromwell here in New York before going to the Obama administration, first as a senior advisor to the Deputy Treasury Secretary, and then as a special assistant to the president in the White House as part of the National Economic Council, where I ran the financial services portfolio. And it was there that I stood up two working groups across the administration focused on fintech. At the time, it was still sort of a new buzzword and concept. So we stood up an administration-wide working group on fintech. We stood up another one on distributed ledger technology that was mostly national security based. And from there, I was really hooked in this space, and I thought it represented a lot of potential for modernization of financial services, for financial inclusion. So when I left the administration, I had spent all this time building policy, implementing financial services regulation. I decided I should do the thing, not just set policy for the thing. So I moved to Silicon Valley and helped start an insurtech company there with a few friends. That company then went public earlier in 2021. So I have a great appreciation for what startups go through in terms of building the company, in terms of dealing with regulators. And then I was privileged enough to be nominated by Governor Kathy Hochul to lead the Department of Financial Services and confirmed by the State Senate in January.
That's amazing. I feel like you've really gotten a chance to see perspectives from the startup to the White House, the legal side, now coming in as a regulator for New York. It's really, I think, helps to make a more robust perspective. I mean, now coming into this fairly new role as superintendent of the New York Department of Financial Services, how does this role fit into the overall financial and fintech ecosystem? And then what do you see kind of as your top priorities in your department for this year or even the greater future?
Yeah, DFS is really a global financial regulator. We regulate traditional banks, including the US branches of international banks, including 17 of the 30 GSIBs. We regulate insurance companies, including health, property, and life. We regulate money transmitters, check cashers, virtual currency companies, mortgage servicers, student loan servicers, and we're here in New York in the financial capital of the world. So we really are a global financial regulator. We have a vast remit, but broadly, my goal for the department is to build an equitable, transparent, and resilient financial system that benefits individuals and supports businesses. And when I think about my goals for the department, our priorities, really, I often talk about the three Ps. So our policy, process, and people. Mm-hmm. On policy, we're really working hard to establish a new norm and set the bar to say policy and regulation can protect consumers and make New York State the best place to do business. We really can accomplish both of those objectives together. And it means we have to lead through collaboration, lead through engagement. So as we're making policy, as we're writing regulations here, we're very focused on the data. We're very focused on engaging with all stakeholders, whether it be consumer advocates, legislators, other regulators, industry. And that's how we're going to make the best policy and accomplish our two objectives of protecting consumers and markets and making New York a great place to do business. Secondly, on process, all of the work that we do here has to be conducted with operational excellence. And that means that our decision-making is efficient, transparent, fair, surfaces all the data we need to make good decisions, and surfaces the best solutions for New Yorkers. So we're very, very focused on running a transparent and efficient process here, and everything we do being done with operational excellence. And then the third P is really people. Neither the policy nor the process is possible without great people. And I'm very lucky to have a great team here at DFS. But we're really trying to shift the perception so that people understand DFS is an outcomes-oriented, innovative regulator with a culture of performance so that we can continue to attract the best talent to public service and to DFS in particular. And I have a personal goal that one day DFS will be in that magazine of the best places to work, and it'll be the only public service place that has the honor of being on that list. So that's a personal goal of mine.
I love that as a personal goal. That's amazing. It sounds like I would imagine your days are insanely busy. I didn't realize how vast the DFS's purview really is. That's just a few things there.
Just a couple of things.
Yeah. No, but so many of the things that you said between data, people, equitable, transparent sounds so much like the things that we at FinTech Sandbox talk a lot about. In fact, last fall, the theme for Boston FinTech Week presented by FinTech Sandbox was financial services for anyone, anytime, anywhere. And that's so important to us as a theme and a strategy and focus going forward. So I'm curious your perspective on what role regulation plays in ensuring that we're actually meeting the financial and banking needs of LMI communities and how that really informs your activities at DFS, and what steps really kind of regulators are taking to promote inclusion within the financial services industry and making sure that financial products themselves are welcoming and accessible to all consumers, which is, should be a focus for so many fintechs now.
Yeah, absolutely. Well, I'm the first woman of color to lead DFS. And so for me, this issue is very personal. I try to bring my lived experience as a woman of color to work every day as we think about the decisions we have to make, as we think about the role of a regulator in financial inclusion, in developing safe and responsible innovation so that more people can be included in the financial system and have the financial health and well-being that they deserve. So first, we need to increase the representation of diverse individuals in the financial services industry. The industry really does need to mirror the diversity of the world that it's intended to serve. And with that increased representation in industry, we need to do a better job driving inclusion through new, innovative, safe, transparent, affordable financial products. And I think this is part of the promise of fintech, and it's our role as a regulator to make sure as those products are developing, these new innovative products and services are developing, that they are safe and that they're affordable and that they're transparent. So they really are serving the needs of those who need them most. Mm-hmm. And when it comes to our work as regulators, it's really important that we're focused on how our policies, how our regulations impact everyday people. And that means re-examining the status quo and the way things have always been done here at DFS or with other regulators, and kicking the tires on everything we do to make sure that we are beginning and ending with New Yorkers in mind. So on diversity, we're in the process now of collecting industry-wide data on diversity. That means beyond just thinking about who the CEO is and thinking about who are the senior leadership in our regulated institutions, who's on the board, who's doing product development. So far, we know when we look at the C-suite, they're not terribly diverse, and most of the diversity is represented in the chief diversity officer slot. These roles are incredibly important, and I'm old enough to remember in financial services when those roles didn't even exist. But in addition to having diversity in the chief diversity officer slot or in the HR slot, it's incredibly important that we have diverse leaders with P&L responsibility. Those who are developing the products, those who are thinking about the bottom line of the institutions in which they work, those individuals have to be diverse in the broadest definition of the word as well. So that's something we're really pushing our regulated institutions to do, and something I talk with CEOs about all the time. Second, as I indicated earlier, there's a lot of hype around fintech and financial inclusion. And while some progress has been made, there's still a lot of work to do. Solving access issues is hard. There's lots of complex challenges. We think about the digital divide, digital literacy, making sure these innovations are affordable and transparent. So we need to make sure that these developments and these innovations are happening with these underserved communities in mind, and that we are protecting them while also making sure that they can participate in the gains that these innovations have to offer. So you're going to see a lot more from me and from DFS around these issues.
I'm so excited to see what's to come. Again, we talk a lot about not just the availability of these solutions, but the accessibility of these solutions and making sure that they're getting in the hands of people that need them and when they need them is so huge. And I love what you touched on about chief diversity officers and that representation throughout senior leadership. So you definitely see that trickle from financial services into fintech as well, and who's starting businesses.
Absolutely. And I'll say too, just quickly, I mean, when we talk about innovation in financial services, it's about fintech, it's about mobile technologies, it's about virtual currency, but innovation is also about how incumbent institutions evolve, and it's also about how we regulate. So for instance, I talked about questioning the status quo, really kicking the tires on the way this regulator has done things in the past. One example, when I came in, it came to my desk to approve an increase in check cashing fees here in New York. And I was examining the methodology, and historically, check cashing fees had been tied to CPI. The industry had become accustomed to a standard annual fee increase. For me, I came in, and again, bringing my lived experience as a woman of color, I said, I don't think this methodology makes sense. If we look at what CPI is doing with inflation now, of course, with the war between Russia and Ukraine, this is not a good way to think about the cost of check cashing. It's an incredibly important service for those who don't have bank accounts or don't regularly use their bank accounts. And this methodology is really going to hurt consumers in a terrible way. So we froze check cashing fees at their 2021 level. While we did the work of engaging with stakeholders, proposing a new regulation that'll come out soon that will propose a new methodology for how we price check cashing in New York. So I offer that just to say, innovation is not only about fintech, and it's not only about our phones and virtual currency and all the things that get so much attention, but it's also about revisiting the status quo and making sure that regulators are starting with the consumer in mind and taking an innovative mindset as we set about our work.
Absolutely. Challenging our own way of thinking sometimes.
Absolutely.
Well, another area kind of diving into this, I personally don't think we hear enough about banking deserts, which can occur both urban and rural areas and really leaves residents unable to access basic financial services. Plus, it leaves communities vulnerable to predatory lending, as you know, and expensive check cashing services. Have the banking development districts really been an effective countermeasure to combat this?
Yeah, and one of the amazing things about New York that I think goes underappreciated, because so much attention gets focused on New York City, but not only do we have New York City and a lot of the issues with banking deserts and the digital divide that come along in urban settings, but we have a lot of suburban and rural areas in New York as well, and they experience banking deserts in a different way than our urban populations do. So one of the exciting things about my role and the work we do here at DFS is we get to address these problems in all these different settings and think creatively about solutions. The Banking Development District program that you mentioned, which we call BDD, is one of those ways. And in fact, early in my tenure here, I approved a BDD in the Bronx that helped kept a branch slated for closure open. But as I was talking about re-examining the status quo, I have an alarm going off on my phone. We're actually in the process of re-examining our banking development district regulations and considering potential reforms to ensure that the program is as effective as it can be. And while BDDs are a piece of the puzzle, I do think we can't just continue to think about traditional banking services in traditionally underserved areas. We have to also think about new and innovative ways to fill these gaps. And that's one of the reasons I think fintech has such an important role to play.
Nice. Yeah, I think you're absolutely right. Everyone focuses so much on New York City, and the challenges are different when you look at urban living versus rural living, suburban. So it's great to hear how those are playing out in other areas of the state. You mentioned before about digital currencies, and I think this audience might kill me if I don't hit on that today. So they've obviously been an increasingly important topic, whether it's the recent executive orders on central bank digital currencies, the role of crypto playing in international conflicts, as you were just mentioning, or really just more broadly, the discussion around potential for more financial inclusion and access through these kinds of technologies. How is DFS approaching digital currencies, and what are kind of the key regulatory or technological dynamics and risks that fintech should be thinking about here in this space?
Yeah, absolutely. And I want to say I'm so glad that the federal government is really digging into this now. New York was actually the first US regulator, state or federal, to create a virtual currency regulatory regime in the BIT license. We also have limited purpose trust charters as well as money transmission licenses. So it's a regulatory regime that is quite rigorous, and I'll touch on that a little bit, but also offers flexibility for companies. But it really, because I'm a competitive person, it really irks me when people talk about the space being unregulated, because we've been regulating the space here in New York since 2015 and doing so quite rigorously. And that rigorous regulation has really attracted a lot of companies and innovators here to New York. In fact, last year, about 46% of investment in crypto writ large was made into crypto companies here in New York, about $41.1 billion. The imprimatur of a BIT license or a limited trust charter as given by DFS really is a mark of credibility for companies. It's good for their investors, it's good for their customers, it's good for entrepreneurs. And so we see the demand for BIT licenses, for limited purpose trust charters just growing and growing and growing, because the good actors in this space are people who want to be regulated, and they want that stamp of credibility from a regulator that's been at this for a long time and has a rigorous regulatory regime. But at the same time, we're doing a lot of work to modernize not just the application process, but our supervision of the area. So first, we're building out the team here, adding a lot of new talent. It's an area that's really been quite under-resourced. And that speaks to one of the legitimate complaints that I think the industry has, is that the process takes too long. So we are reviewing the process, rebuilding in terms of our human capital resources so the process can move faster and be more efficient without sacrificing the regulatory rigor that the space requires. We've brought in some wonderful talent from the private sector, some wonderful talent from other regulators, and that process is just going to become better and better over time. We're also looking at new technologies that will assist us with supervision and working closely with other states and with federal regulators. We recently acquired new blockchain analytics tools and engaged a number of service providers to strengthen our transaction monitoring capabilities. And this was something that was in the works anyway, but we accelerated our work around this because of the conflict in Russia and Ukraine, because we wanted to make sure we could hold our virtual currency companies accountable when it came to sanctions compliance and transaction monitoring. And additionally, the industry is going to hear a lot more from DFS soon on stablecoins, on DeFi, on NFTs, and other emerging technologies, both in the virtual currency space and otherwise. But here in New York, as I said, we have a long history of regulating this space. We have robust anti-money laundering and BSA requirements. We have robust cybersecurity requirements. DFS was also the first regulator to come out with cybersecurity regulations known as Part 500 several years ago. We're going to get ready to amend those regulations to keep up with cyber risks. So that'll happen this year. But we're doing a lot in the virtual currency space and looking forward to lending our expertise to the federal government as they begin their journey here.
That's really exciting. It's great to hear about not just the history of DFS and the work that you've already done in the space, but continuing to take a modern approach, continuing to add in new technology, new talent to stay current and continue to move the industry forward. So to close this out, I always love to end with future fintech forecasts when I talk to experts like you. We at FinTech Sandbox obviously see so many innovators and entrepreneurs looking to build new solutions. What areas do you think need even more attention over the next few years? And how do you see the role of fintech in the evolution of the financial services industry over the next, say 5 or so years?
Yeah, absolutely. It's a hard question to answer. I think undoubtedly AI is going to continue to be a huge part of what we see in fintech, in financial services, and the way that develops. And it's incumbent upon regulators to stay abreast of those developments, to make sure that we're continuing to protect consumers and protect markets from some of the risks there without front-running innovation. I think there's going to be some really, really valuable innovation that comes out of AI, both for financial inclusion and for the way regulators do their job. So we're doing a lot of work here at DFS to implement data analytics and AI as a regulator to help us assess risks, to help us draw new insights about the market, about climate, about virtual currency. So that's a space I think is ripe for continued innovation and work by industry and regulators alike.
Yeah, it has so many, I mean, to your examples, has so many applications across a variety of areas. I think you're absolutely right there.
Yeah. So we're excited. We're excited to see what the space brings.
I was going to say, now I'm just excited and jazzed up about the future, right?
Absolutely.
Well, amazing. I appreciate your time so much today, Adrienne, and for sharing your FinTech insights with us.
Absolutely. Thanks so much for having me.
Bye.
Bye.